Here's Marcelo Torres with one more educational content for you. Do you know what VIX or the VDX is used for? This is what I'm going to teach you right now, okay? First, let's start with explaining what is the Dow Jones and the SP 500. Dow Jones is a index that measures the performance of the American industry, okay? And the SP 500 is the index that measures the 500 biggest companies in the US that are listed in the stock market. All right? Okay, so comparing both of these, we can see that they are almost the same. See? Look, I'm going back and forth, S&P, Dow Jones. We can see that there's a slight difference, for instance, on the Heikiashi chart. See, check this one here. The move, we have less space in the S&P than we do on the Dow Jones. All right. Okay then. So even though it looks like we have the same chart, it is not. Okay. Maybe this is because we have robots trading on it or something like that. So it ends up that we have similar charts. If you guys check, for instance, down here on the wave, on the volume wave pivot, we can see that it's slightly different from the Dow Jones. See? So we, as I show you guys, we have a slight difference. You can also see the volume right here on the Dow Jones. It's slightly different from the one we have on the SP 500. See? Okay. So once we have different chart, we are able to have different volatility measures. So for the Dow Jones, we have the VXD, okay, which measure the volatility for this index. What happens with this volatility index? Once the stock market is going up, it means that the volatility is down. When some risk is going on with the Dow Jones, this index, volatility index, the VDX, starts moving up. So if that is true, then maybe we will see the Dow Jones index way going down and the VDX index supporting this downtrend move, and he would go up. Recently we saw the VDX and the Dow Jones going up, but the Dow Jones was going way up and the VDX was just going slightly up. This means that there is no risk for the Dow Jones movement, okay? Because if the index was going down, then it was confirming that this move was on risk, or was confirming that it was positive. That's why it's moving on. Or if the opposite, it was negative, the index was saying that this Dow Jones index was on risk because it was going down. Okay, so right now, as you can see, last week I said that we had the Dow Jones inside a bullish wedge. Okay, so that means that sometime in the future we are going to have the movement accumulating in this wedge, and it should go down if it follows the rule. And normally the regular stock market does follow, I don't know, 99% of the times it follows the right rule, okay? The technical analysis rule. So we might see this guy going down. Once it was still going up since the first candle that went up was on March 24th, it was going up. So what happened with its index? The index started on March 24th. Here we go. It still had some doubt movement. See, here we go. And it was going down, confirming that the uptrend on the Dow Jones index was true. Okay, even though it started slightly moving up instead of moving down. After that, it started moving down as the Dow Jones moved up. So what do we use the VXD for? We use it as a confirmation, all right, as a confirmation, and also it's used as an index that gives you what is coming on the market. For instance, let me erase these lines here. For instance, I'm telling you that if we came from a downtrend and started accumulating going up on a bullish wedge, we should go down, right? Which means that the market's going to go down. And then you can see here on the stochastic, it should go down. And then we see here, we still don't have an information on the relative strength index. It should form something during the week because we have, since we're on the daily chart, we have some time to form this negative move on the wedge. As you can see, we have a positive volume wave being formed, but this could go down since, like I said, we still have some time to form a positive move inside the wedge before it goes down. So this means that we might have, I don't know, I would say like maybe 3 or 4 days, maybe the whole week, this next week would be a positive week. Then we might meet something that would push it down, okay? And there's another thing. As you guys can see, the prices are going up, the index is going up while the volume is going down. This is another situation saying that we might have some top reversal going on. All right. So let me just clear all this up again. Okay, here we go. And let me go now to the analysis on the VXD. The VXD says that we're going down, but it's already oversold. So it means that on the stochastic, we should go up, correct? We still don't see this information going on the relative strength, as we don't have the information here on the Dow Jones. But as soon as this information starts being built on the Dow Jones to go down, we might see the same information being built to go up on the same indicator, okay? Which means that we might have a bottom reversal and the index is going up. What does this give me? This gives me the information that if it's running sideways and it might give me a bottom reversal, we might see a top reversal confirming on the Dow Jones, which is what I, Marcelo Torres, expect. Okay, so if we check, unfortunately, we don't have volume on the VXD, so we can't use the volume wave. But look at the MACD. We already have a positive bar being formed. Okay, so at some time we might see something going on. This is nice because now we have a index that gives me the opposite of a certain market index, which is the Dow Jones. All right. So if we have the same thought regarding the S&P 500, it's exactly the same thing. We have here stochastic getting in the overbought zone, so we might see a top reversal going down. The same thing is here. If we have prices going down and started accumulating inside the wedge going up, it should sometime it should go down. And if it goes down, it confirms what the stochastic might tell me. And check this out. The histogram of the stochastic is already exercising some downtrend move, okay? And the same way we have on Dow Jones, we should sometime this week see the relative strength index starting to build a negative move. So we have all this information inside one indicator, actually, I'm sorry, in one index, which could end up showing the opposite way on its reference in the volatility index, which is the VIX. So the VIX is the volatility index for the S&P 500, and it gives me the opposite situation. It's saying that we have a downtrend on the VIX. As we had the stochastic getting in the oversold zone, we should see a bottom reversal and having it going up. At some time this week, if that is true, we should see the relative strength index exercising some positive move, which means a bottom reversal, which will give us a bottom reversal on the index as well. If that happens while we see a top reversal on the XP 500, which would be this one right here, it confirmed that the SP 500 is sure going down. Okay, like I said, we also saw in the VIX while the S&P 500 was going up, we saw the VIX also slightly going up before it went down. And then it confirmed, no, it's going up, and I confirmed because the volatility is going down. Okay, nice. But now we see the opposite. We see that the S&P 500 is sometime in the close future, very close future, we should see the S&P going down, which means its VIX volatility index will go up. Okay, and the further up one of these two or both index go, the harder is the bottom or the downtrend that these index are gonna follow. Okay, so this is what it stands for, the VIX and the VXG. We now have an index, market index, and a market volatility going on opposite direction, but confirming one another when that happens. Okay, we don't want to see them going on the same direction because they don't confirm, so it doesn't mean nothing for us. But if it goes in opposite direction, it confirms. So if I have an uptrend on one on a market index and a downtrend on the volatility index, good, that is good. If we see this going up, we have to see or the market index going down or the volatility going down. Otherwise, it's not confirming. Okay, so this is very important for us to figure out what's the real movement of the of the S&P 500 and the Dow Jones. Okay, folks, that's it for today. I hope you guys like this. Please spread the word. Share this information with your friends and your social network, because I'm quite sure you might help somebody that is interested on the stock market but are afraid to start trading because they don't have enough information. And TradeWiser is a place for them. All right, that's it, folks. Thank you very much for following me on this video. Don't forget to like down here, just a quick button. Go there and click a like. Say you like this video, okay, and share it if possible. And if possible, please follow me on the social network that you prefer. I'm on all of them, okay? And don't forget about my disclosure. My disclosure says that my opinion is just my opinion, okay? Please, this is not an investment indication. All right, advisory. Okay, that's it, folks. Thank you very much, and hopefully this will help you with your trades. All right, that's it. Take care, and now it's showtime.